Assalamu alaikum everyone. So today we're going to talk about how do we decide whether a stock is halal or not. How do we decide whether a stock is Sharia compliant or not? So I've pulled out a very decent presentation on the topic, and I will be basically proceeding according to the slides in the presentation, and I have used this in my MBA as well. So a quick overview. So in Islam, it is permissible for you to engage in business. It is permissible for you to engage in trade, in buying and selling of goods and services, but also buying and selling of business ownership. And a stock or a share simply is ownership interest, is simply a fractional ownership in a company. Now, shares are also available for private companies, but we are mostly going to focus on public companies. So, yeah. So when you buy a share, you're basically buying ownership in a public company, a fractional ownership in that company. So it is allowed for you to invest in that company. It is allowed for you to buy the shares of that company as long as the business that the company is engaged in is halal. Okay. और अगर company सही sector में है, like acceptable sector में है, but in spite of that, there are certain elements which are objectionable. यानी financial point of view से उस company में जो उसका capital structure है वो objectionable है. फॉर एग्जाम्पल कंपनी काम तो बहुत ठीक कर रही है, लाइक एक्सेप्टेबल काम कर रही है फ्रॉम एन इस्लामिक पॉइंट ऑफ व्यू, लेकिन वो जो पैसा यूज़ कर रही है वो उसने कर्ज पे लिया है, डेट पे लिया है, जिसपे वो इंटरेस्ट पे करता है, या फिर उसने दूसरी कंपनीज को क्रेडिट दिया है जिससे वो इंटरेस्ट वसूल करता है. तो दीज आर थिंग्स विच विल मेक इन्वेस्टमेंट इम्परमिसिबल इन दैट कंपनी. तो हमें ये भी देखना होता है कि बिजनेस का क्वालिटी, यानी बिजनेस जो वो कर रहा है क्वालिटेटिव पॉइंट ऑफ व्यू से, वो जो बिजनेस जो एक्चुअल प्रोडक्ट बना रहा है, सर्विस दे रहा है, वो ठीक है कि नहीं. और अगर वो ठीक है तो फिर उसका जो कैपिटल स्ट्रक्चर है, उसका जो फाइनेंशियल स्ट्रक्चर है, उसका जो अकाउंटिंग स्ट्रक्चर है, वो इस्लामिकली एक्सेप्टेबल है या नहीं. ओके, सो आई एम गोइंग टू रीड अ लिटिल बिट फ्रॉम द स्लाइड्स. द प्रिफर्ड इस्लामिक इन्वेस्टमेंट फॉर्मेट इज इक्विटी. तो शेयर्स को इक्विटी भी कहते हैं. However, share or equity comes along with ownership. Hence, Islamic investors have to ensure that the selected company's activities and structuring are not repugnant to Sharia norms. Okay, due to the complications of modern business and particularly the pervasiveness of interest transactions, fully Sharia compliant equities are extremely rare. So Sharia scholars have arrived at a minimum compliance criteria, which, while excluding companies in gross violation, yet provide investors a reasonably wide choice of Sharia compliant equities. What is Sharia screening? It is the process through which stocks are filtered for investment by Sharia compliant investor or his manager. Why is it needed? 100% Sharia compliant stocks are hardly available anywhere. Therefore, we need to basically set up a tolerance limit where we can therefore have some sort of criteria for investment, right? And wherever 100% stocks are, if they are available, then they are either not liquid or they are not sufficient enough to make a viable portfolio. What is its importance? Stocks are the best available form for investment on Islamic principles by individuals, portfolio managers, banks, insurance and reinsurance companies, pension funds, etc. Okay. So how does screening happens? There are two main parts to this. I already told you this. The first is, what is the business of the company? Business sector screening. So screens for non-permissible income from alcohol, port, tobacco, gambling, conventional finance, conventional entertainment. All these sectors are not permissible. Then we have financial ratio screening. So Sharia repugnant debt or interest-based debt has to be excluded, or it has to be on a bare minimum level, right? Extent of cash and receivables. तो ये दो चीज़ें, एक business sector screening और दूसरा financial sector screening. Companies should pass both the levels of screens to be adjusted as Sharia compliant, or to be called as Sharia compliant, right? So there should not be Sharia repugnant debt. So there should not be interest-based debt. There should not be an interest-based income, right? And extent of cash and receivables. Now I'm going to quickly go over some of the main Sharia screening norms. So I think the earliest Sharia screening norm was launched by Dow Jones Index, right, in 1999. So business screen is based on revenue allocation. If any company has business activities in Sharia non-compliant group, or even if the subsidiary or subgroup of that company is included in Sharia non-compliant activity, then that company is excluded and removed from the Sharia index. That's the business screen. The financial screen is total borrowings should be less than 33% of trailing 24-month average market cap. Cash plus interest-bearing securities should also be less than 33% of market cap. The market cap here is trailing 12-month market cap, or you could say the average of the last 2 years, right? Accounts receivable less than 33% of market cap. We have Sharia, S&P Sharia screening now, right? The business screen is almost similar to the previous one. The financial screen is a little bit different. Total debt should be less than 33% of market value, the average of the last 3 years. Accounts receivable should be less than 49% of market value. Cash plus interest-bearing securities should also be less than 33% of market value. And non-compliant income other than interest should be less than 5% of total revenue. Okay. Now there are FTSE Sharia screening norm. I think I'm going to skip a lot of it. AOFI. AOFI is the largest body of Sharia setting scholars. So the norm for AOFI is the business screen is that investment is permitted in all companies as long as the objective for which the corporation was established are Sharia acceptable, are Sharia lawful. Financial screen, fundamental rule is prohibition of acquiring and trading in shares of corporations undertaking transaction in riba or interest and undertaking transaction in other prohibited things even when their primary activity is lawful. Exemption from the above. If memorandum of association does not mention that one of its objective is Sharia repugnant, if total borrowings and debt does not exceed over 33% of market capitalization, if the total income generated from prohibited components does not exceed 5% of total income of corporation. So you can see it's a more broad or more lax rule. Coming to the NSE Stock Exchange, National Stock Exchange, which was established in 2013 for India, right? So listed companies are first screened on the basis of business activities and products. Consequently, all non-compliant businesses such as financial services, tobacco, alcohol, pork, vulgar entertainment, manufacture of explosives are screened out. Okay. Coming to financial screens, the borrowing and debt should be less than 25% of total assets. Now note here, not 25% of market cap, but 25% of total asset. So this is a much more conservative, much more orthodox approach. Okay. Interest income plus return from all non-compliant investment should be less than 3% of total income. Again, it's very conservative, very orthodox. Cash plus receivable should be 90% of total asset because cash is not so much of an issue. So these were some of the Sharia screening norms in different countries and different Sharia boards across the world. It's a pretty extensive presentation. I haven't covered everything because the video is getting quite long, right? Major issues and challenges when it comes to the Sharia screening. The first is rule of 1/3. Now there's a hadith which says, the summary of which is somewhat that 1/3 of anything is a major portion of it, right? But a lot of people are not satisfied with that one hadith being the basis of all of Sharia screening. That is one issue, right? Then other issue is market cap versus total assets. So should we use market cap as the denominator when screening of stocks, or should we use total assets, right? Then purging of non-compliant income, right? So halal investment does not only mean investing in halal stocks. It also means that after you have invested in halal stocks, you have to purge, you have to remove, you have to purify your capital gain and your dividend gain. Like you have to give away some portion of it to charity as a form of purification, because even halal stocks, they're not 100% halal, right? Then there is conflict of interest. You know, a lot of people, they set up these Sharia norms which suit their commercial viability. So their Islam and the spirit of the Quran is not really their highest priority. So that is an issue. Lack of exposure of Sharia scholars in the capital market. So a lot of Islamic scholars, they don't really have exposure to the capital market. So this is also a major issue. So that's it for this video. I have covered a very vast, a very academic topic in a very small video, just to give you a taste of the issue. And inshallah, if you guys are more interested, then we can continue this discussion in future videos, inshallah. Assalamu alaikum.